So hello guys, welcome to the second part of our previous video, how to analyze take trades using Fibonacci on V75. So I'll be very brief on this, and just to get a very clear and concise understanding about this Fibonacci. So I'm going to drop my settings of my Fib2, the Fib2 retracement on the screen now. That's it. So first of all, I said whenever you come to a chart, first thing you need to do is to identify your trend line. And on the higher time frame, I'm starting with the 1 hour time frame now. On the higher time frame, we're on a downtrend, but at this zone now that I'm using is consolidating. The current price is consolidating, so on the higher time frame it's on a downtrend. So basically, what you need to do when you come to a chart is that you need to understand what the market is trying to do. That is, you need to know whether it's a downtrend or an uptrend. So for the sake of this video now, we'll be trading only this zone. I'll be showing you only 3 setups at this zone entirely. 3 setups I caught at this zone entirely, and it made me a lot of money. So first of all, you need to know that this was coming from a downtrend to an uptrend. Yeah. So it was coming from a downtrend to an uptrend, and first things first, you need to make sure that you get a very clear breakout structure. Yeah. So okay, let's take just 2 setups at this level now. So the last low that was taken out was at this level here. Yeah, the last load I was taken out was at this level. This was the last load I was taken out here. So what I basically saw was that there will be a possible retracement, and I went to the 30 minutes time frame. This is just the easiest way to use Fibonacci. I went to the 30 minutes time frame to spot out how I'm going to enter and use the Fib2. So this previous high was taken. After this previous high was also taken, then we got a market structure shift. And when you always get a market structure shift, there will be a retracement. Yes, there will be a retracement. So that retracement level now, that is what you want to know where the market will retrace to. That is where you use the Fib2, the Fib retracement tool. So you take your Fib2, you make sure that you are starting from where the retracement started from. The extreme point where the retracement started from was this zone here, so you mark it from here and you take it to the origin that caused the breakout structure. Yes, you take it to the origin that caused the breakout structure, and this was the origin that caused this breakout structure here, or let's say market structure shift rather. Then the next thing you do, you take out your rectangle and then you mark it out like this. So you wait for your entry level at this zone. That is, if price has started trading towards this level, you wait for your entry level at this zone, and then you'll be aiming for a 1 to 3 weeks to reward around this level. Your stop loss should always be above the entry. Your golden zone is always at the point of 382 here, 382 to 236. That is your golden zone always. That is your entry level. So this is how you do it. A 1 to 3 risk to reward, done and dusted. So here again, I also marked out this level for retracement levels, because this previous low was taken out at this level. This low was taken out at this level. So next thing we need to do is, when I saw market started retracing again, I marked out my Fib2, take it from the point where market started retracing from to the origin that caused the breakout structure again, and then this was my entry. So this was my entry around this level, but market took me out early at this level here. market already took me out. This was what happened. Just a little slight and this was my take profit. So it just tapped my SL and then started moving. So you might see all this in the market, you might experience all this. You cannot get it, you cannot get everything wrong, but this was the previous setup I took before this present price action around this level. So every time you are taking a setup using the fib tool, first things first, you need to know your trend, and there are two types of trend, which is uptrend when market is making series of higher highs and higher lows, higher highs and higher lows like this. So and then the next thing you need to do is to mark out, make sure the breakout structure you are marking out on that particular trend is a clean breakout structure. That market entirely broke this previous structure here. That is when you mark out your take your fib tool for the retracement. Also, you do same thing consecutively only if you are on a particular trend and you are trading correctly using the particular trend and with breakout structure. You always get it consecutively, continuously. So same thing applies to when you're on a downtrend. You see multiple lower lows and lower highs like that, and then you always make sure when you target one, you target the next one, which is breakout structure at this level. You now take your fib tool, mark it from this zone to this zone, the previous low to the previous high. Yes, you mark it out and then continuously like that. So that is just the simplest way to take fib use fib retracement to trade V75. So let me just summarize what I said. When you come to a chart now on this particular pair V75 volatility 75 index, when you come to this pair, the first thing you need to do is to identify your trend. Always, irrespective of the time frame you are using, the 5 minutes, 15, 1 hour, or any time frame you are using. First of all, you know your trend. Next thing, you mark out your key levels, which are the breakout structures, the previous ones and the present one. Next thing, you use your Fibonacci tool and then mark out from the previous one. If the previous one was valid, if the previous entry was valid, sorry, this is not the previous one. If the previous entry was valid, then you know that the next one will be valid. But I don't know what happened here. So now what I'm still expecting, I'm expecting the market now to still push to the downside. Then I'll look for another re-entry to take before moving again. It's because I'm expecting 35k, 35,000, a drop on 35,000. So that is what I'm always using to trade this volatility 75 index. When you use this, you will never go wrong with it, but you cannot get 100% of using this strategy. So that is just it for this part 2. Then always make sure you back test the strategy if you are just starting this strategy for the first time. Always back test it, back test, understand the market, and then I promise you won't get it wrong. There are so many entries at this level using lower time frames. There are so many entries at this level, like this one now. We had the breakout structure. Okay, we are on an uptrend, so we had the breakout structure that is at this level now, a clear breakout structure. What you need to do, nobody should tell you, just take your Fibonacci retracement, mark it from the previous high to the previous low. You see a very sweet entry. This is your entry. Then you mark out your long position. From your entry should be around this zone. Then you target a 1 2 3, your SL below the previous low, and then you can see if you are taking a 1 2 3, very nice entry. Or if you are taking more than that, is still okay. So that is just how to take and understand Fibonacci retracement. So I'll see you in the next video. Thank you.